Hi, this week we have three interesting webinars lined up for you. At 10 a.m., we have Resolution 2026, Make Your First Crore, Your Reality. At 11 a.m., we have Building a Resilient Portfolio in Volatile Times, 2026 Playbook. At 12 p.m., we have a Neo webinar, especially for the Middle Eastern investors, on year-end reviews. All the registration links are given below in the description. Please do register and hope to see you all there. Thank you.
We barely have a week left in 2025. When the year began, what were we expecting? Personally, I was expecting 2025 to be much worse. I knew that equity valuations were clearly not in our favor. There were some rare pockets of undervaluation where we could invest. Opportunities to invest in equity were in such selective pockets. But the broader market was challenging when the year began. It was very difficult to invest in microcap. The valuations were crazy. I was filled with fear when the year began on microcaps. SME was something for which I would say I had no words to express my fears. It was completely out of whack and I could literally see losses coming in SME. Small cap looked very expensive. It was difficult to see how profit can be made in small caps. When you see a space and fear how you will make profits, rest assured losses will happen. The extent of losses that we have seen in small caps in 2025 have actually been lower. They could have been much worse. The reason the losses are not looking as bad as they could have been is because our domestic investors have poured money into small caps almost mindlessly. All these things have only prolonged and extended the phase of overvaluation in several parts of our market. But one thing is certain. Markets don't listen to rational voices on valuation. I never expect that at any point in time. Markets actually throw irrationality on the faces of rational investors. Then finally, the markets have to give up on their own irrationality. It is not rational investors who change the irrationality of the market. So we are merely glorious spectators in this market. 2025 also saw something which we expected play out quite dramatically. One is the spike in the valuations of precious metals like gold and silver. It happened just as we thought it would happen. The second thing is we expected interest rates to go down. Definitely it happened. When interest rates went down, debt as an asset category became even more unattractive, forcing a lot of people to compel themselves to invest only in equity. Large cap, which looked like an unattractive space in the beginning of the year to most people, has actually been the saving grace of 2025. I was of the view that large cap was definitely a safe space to invest in even in the beginning of the year. All our investors in Milestones to Wealth invested predominantly in large cap companies and funds which were pure large cap funds. We completely avoided the micro cap and SME space, and to a large extent we also steered completely clear of the mid cap space as well. So that call has actually played out just as we expected. I also manage a flexi cap fund called Solitaire. There we were expecting that we would get more opportunities to invest in large cap companies which were aligned to the philosophy of Solitaire. That has been a little difficult, but as the year draws to an end, we are getting better opportunities to deploy capital in large cap companies. The small cap space is something which we were very cautious about. We knew that the market could turn, especially in very small companies, which are actually micro caps. As expected, that space has been a challenging spot. In our portfolio, it is the small cap companies that are remaining a challenge and a bit of a drag. While we bought thinking that the valuations are reasonable relative to the rest of the market, all stocks which were trading cheap have become cheaper. So we are in a peculiar situation where we need to take a call as to when we should scale up small cap. We are waiting for evidence that the market in the businesses that we own are going to turn. So we are following an extremely bottom-up approach in the small cap space, and a very cautious one at that. But the year overall has not been as bad as we feared it would be at the beginning. The reason is that our choices at the portfolio level have broadly held well, and despite being a portfolio with a high weightage to small cap, we have not done as badly as the small cap index. We have definitely not done as badly as the micro cap index. So our companies are relatively better positioned than their comparable peers. But we run to a very difficult benchmark, the BSE 500. So it's been a rather tough year, but a year much better than what we anticipated it to be, especially given the broader market expectations which we had at the beginning of the year. In other places where we manage money in the PMS, we have had quite a good year, especially in the multi-asset portfolio sphere which I manage. There, our team has done exceptionally well, and we have delivered returns way higher than any category amongst mutual funds. It's been a great experience there, but to a good extent, this is something that we expected. In the sense, we expected to perform better than other spaces, but the returns that have played out in this portfolio are definitely ahead of our expectations. So 2025 has rewarded conservatism. 2025 has rewarded caution, and 2025 has punished us less simply because we were reasonably valuation driven inside our portfolios. We did not chase momentum. We did not chase the hot themes. All this has definitely been a blessing in 2025. In summary, I believe 2025 could have been a far worse year. The year has been kinder to us. I am very thankful for that. And as the year has progressed, while preparing for the future, a cautious and conservative stance is what I believe is the right thing. And that's exactly what I have taken in all my portfolios, whether it is personal, professional, or even portfolios in mutual funds which we help others curate. So wherever we are working, whether personal or professional, the conservative stance is something that we have relied heavily upon in 2025. By relying on that conservatism, we have managed not to be punished, and we have also managed to deploy more capital where we have high conviction. We believe that this strategy is something that has to be run for a longer period of time. We need to invest, but we must be extremely valuation aligned and driven by where we see attractive valuations and not by a compulsion to deploy capital. So 2025 has been a wonderful year, but not a great year in terms of returns. It has been a very kind year, but not a rewarding year. So there are some years when an investor should be thankful. In my career, there have been several of them. But in the last 5-6 years, investors have been thankful only to the years that rewarded them more than they expected. But 2025 was a year when we should be thankful for not being punished too harshly by the market. I think that itself is a blessing, and one should hope that 2026 is better than 2025. I'm sure we need to sharpen our thinking, position our portfolios into a better place, and make sure that we face 2026 with more confidence, more positivity, and greater objectivity. Thank you for watching this video.